Welcome to your daily dose of dividend. Lewis made a request in the comments for John Deere. Thank you, Lewis, for the suggestion. Let's take a look. With a market cap of $116 billion, John Deere is a S&P 500 company within the farm and heavy construction machinery industry. The stock price has overperformed the S&P 500 index over the last 10 years, with dividends reinvested. Let's briefly analyze some key fundamentals. Most data is based on a 5-year average. Sales growth, 10.5%. Earnings growth, 31.6%. Earnings estimates, 15.1%. Return on capital, 5.68%. Debt to free cash flow, 9.45 years. Share buybacks, yes. And now for some dividend metrics. Dividend yield, 1.11%. Payout ratio, 21.62%. Growth rate, 11.03%. Growth years, 4 years. That gives John Deere 6 out of 10 points. Well, that's a mediocre score. You might want to reevaluate this company as a position for your dividend portfolio. Now, let's take a look at the current stock valuation. Based on historical multiples and future estimates from GuruFocus.com, John Deere is significantly overvalued. At FastGraphs.com, we can see that analysts estimates a total annual return of 10.6% compared to the normal valuation over a 10-year period. What's your thoughts on John Deere in a dividend portfolio? Feel free to make a request in the comments regarding future videos. If you found value in this video, please leave a like and welcome back tomorrow for another quick analysis. Have a great day.